Afternoon all. How are we all doing? Afternoon Rich, afternoon Jay, afternoon Kenny, afternoon Diamond, afternoon Derp, afternoon Michael, afternoon 1989 Berlino and M, and play salty games. Sup Ninja. Oh, I did body combat last night. Oh, that hurts. Afternoon Rob. Oh, please consider coming to Dubai. Would love to. It would have to be on holiday though, with the kids. Afternoon, Dave. How are we doing? Just watching this NASDAQ fly through resistance. Well, it's not really much of a resistance. It's an old resistance. In fact, I might as well get rid of that resistance. And look at where we're going. So we've got a couple of levels coming up now. 128.61 to the upside. That's a previous support. That's pretty valid. That is valid as well. So yeah, a few areas basically to the upside to target at the moment. But yeah, I don't quite know. I was looking at Financial Juice to see if I could see what's actually caused this spike. There's not been much news this morning. Biden preparing to call for new bank rules after SVB, blah, 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 blah. But yeah, no real news this morning at all. We've got no news this afternoon, apart from pending home sales, which doesn't tend to do a lot. So yeah, I'm not quite sure why the NASDAQ has taken off, but it has, and it's absolutely flying, which is good. We've got some ADRs to look at as well, which is good for a change. Afternoon, Joaquin. So the ADR hits we've had today are the pound odd. That's a hit to the upside. It's already played out, so well done if you got on that. It's a very quick 5-minute reversal. There's the 15. There's the 5. So that was your entry. Just got in. There was a previous entry there. That was a reversal alert there, which got invalidated. Then we had another reversal alert there, which got invalidated. And there's your next entry. So you would have probably taken either that one or that one. But that one is there now, and there's a nice big propulsion gap to the downside to target. So that's already playing out. US dollar yen, that one possibility of getting into now. So that's an extension to the upside. So we were talking this morning about these propulsion gaps that we got formed on yen move and how they should really be getting filled. So that's that one filled there completely now. We've still got these targets to the upside, which you can't see because they're behind my head. These targets to the upside to aim for. So there is still more upside on this. So home sales might give it a bit more of a push, but I would expect to get pulled back down into this propulsion gap down here before we go to the upside. So good ADR reversal opportunity. M5 reversal, it's going to be really tight. Half an ADR on that one, if that triggers, is 90. So if you go for half an ADR, it's that propulsion gap there. If you go for quarter of an ADR, probably get out in here. So yeah, a couple of good opportunities there. We've got 4 minutes to the open. We've got 2 weekly hits as well, CAD yen. So that's done its weekly range now. We're on Wednesday, so Monday, sorry, there's your Monday open. That's the weekly range. Again, we're coming up into this propulsion gap. So this yen is massively weak at the moment. So once we get to that propulsion gap, if we can get a push up to 125 ADR on that today, that'd be lovely. I've already got a sell on it. I'll be adding a second up there. And we've got Euro Yen has also hit. So there's your Monday open. There's your hit, which is 345. Average weekly range is 336. Again, you can't see it because my head will be in the way, but heading to that propulsion gap there. to close that out. So that's it. All good. Lots of opportunities. Well, a couple of opportunities. I wouldn't say it's lots, would you? Afternoon, John. Afternoon, Ike. How are we doing? So this afternoon, we're going to have a look at the NASDAQ. Educational sessions yesterday. Good. I've been redoing the bootcamp. I'm doing a... I don't think I've got it. Hang on. Whoop. Just move that out of the way. So I'm redoing the bootcamp. And what I'm trying to do is this. So it is the 5-day course delivered in 30 minutes. Wish me luck. So it was 165 slides, the bootcamp. So far, I've got it down to 80. So if you do the maths on it, that should be around about 5 hours. So I've still got to trim it down. But basically what I'm trying to do is do a kind of a simplified version of the bootcamp, just to basically explain the basics quickly. Because what I am finding is people are doing bits and pieces of the bootcamp and bits and pieces of videos, and they're bumbling bits together, and I keep getting asked lots of questions which should be really obvious if you're position trading, and they're not. So I'm trying to do a cut down version which I can kind of say, right, go and watch that 30 minutes. It takes you 30 minutes and it will cover all the real important stuff, like don't use a stop loss, market moves up and down, you've got no control, goes up, down, sideways, all the stuff I say in here every day. So I'm working on that at the moment, and I'm just going to try and whiz through that. I might do it as a live session actually at some point. NASDAQ opens in 26 seconds. We are pushing hard to the highs. The DAX is also pushing up, and we've got the gap fill from today to do on the gap, on the DAX. So not sure that's going to come down today, seeing as the NASDAQ's pushing hard. So we'll see what happens. But yeah, NASDAQ off the top at the moment. So we might have quite a volatile open. Let's see where we go. Oh, EA is not triggered. That's because I've been mucking about with it. Should have left it alone. There's your pre-minute 15. Pre-minute. Your pre-market 15, which is just basically triggered along. We've got lots of downside targets here that have triggered off of this push up today. So there's a lot of more downside, I think, today than there is upside. We're a long way from ADR though, so see where we go. But fair bit of movement potentially today. Afternoon, James. Afternoon, Brian. G'day. Nice to meet you, mate. Good Australian accent, eh? That was bad. It's really bad. So we'll see where this goes, this 5-minute opening range. We may well come down and retest this area. And obviously these two propulsion gaps are the big ones. So you can see how we pushed out the highs here, tested, pushed. So there's 3 big downside targets today. Like the new ticker. Oh yes, yeah. Everything you need to know is down there. Good, isn't it? Afternoon, Baggy. Yeah, basically just trying to get people to go and do the website stuff, which is obviously good. 57 people. I'm not sure how many thumbs up we've got. I can't see, but do the thumbs up if you haven't done it. Struggling at the highs at the minute. So if we have a look at the NAS where we are right now, let's see what the Dow's up to actually. Yeah, Dow's coming down. So Dow's coming down hard. NASDAQ pushing up hard. See if we get that reversal alert on the Dow at the open, because the Dow's obviously pushed hard as well. And we've got those downside targets on the Dow too. That And we've got that downside target there. Wow, look at that divergence. NASDAQ flying, Dow coming down hard. Have you ever researched implied volatility from option market and weekly ranges? No, never looked at it. Don't do anything to do with options. I've never looked into options. It's one of those areas I've just never been drawn into. So I don't have time. I've got my trading, so I haven't really got time to look into other strategies much. Play salty games. Don't make it easier for those not willing to put the work in. Perhaps more comprehensive study guides, tests, quizzes, and flashcards. God, you're hard work, aren't you? Yeah, I agree. However, we live in a world of can't be asked and need it done now. So the reason behind trying to do a fast version is just to basically get the basics over. There's a lot of people that run a mile when they watch the first, because that first 20 minutes of the boot camp is basically a quick, this is what you're going to expect. And here comes 160 slides. And I think people go, what? Can't be asked with that. And they don't, what they want to know, what everybody wants to know, yeah, at the beginning of all these videos you see on YouTube now is, right, let's cut to the chase. This is it. And they give you everything up front. And then you either like that and you get on and watch it, or you don't like it and off you go. And I haven't got a video that does that. So that's the idea behind it. But it's very hard to compress what I do into 30 minutes, basically. But I'm going to try. NASDAQ, I fancy short. Dow's coming down. There's your 5-minute opening range gone in. Either the Dow's going to rally or the NASDAQ's going to drop from this. We are struggling, but there is no resistance. So it's quite a tricky one at the moment. We've got literally no reason to turn here apart from this propulsion gap. Hey, look, everybody. There's that propulsion gap I drew in the other day that didn't exist. Funny that. It's filled it. That's kind of what I'm covering, basically, in the bootcamp. It's like, this is a propulsion gap. This is basically what it is. Have a look at this. It goes back to these all the time. Tick. This is an RSI. This shows you when the market's knackered. Tick. This is a reversal alert. This basically shows you market structure. Tick. Put those three together. Don't use a stop loss, and you'll end up with results like this. Tick. That's basically what I want the video to do. And then everyone goes, ooh, and then they'll hopefully delve further into the proper boot camp and spend some time on it. Clickbait, they call it. Okay, we're at the highs on the 5-minute open. I'll draw it in. There's your 5-minute opening range. Dow, however, is not interested in going long at the moment. So real divergence on these. I'll probably leave this a bit and see what the market wants to do. No direction yet. DAX perhaps up to 15,500 round number. DAX 15,500. Well, all out there. One day maybe, but I'd be looking for closer targets than that. Derp. It's a bit far away for me. Play sorty games. Why not copy trade signals? Maybe I should, yeah. I've got signals. If you want to copy trade, there's signal running. There's signal running. There is a signal running, and there are subscribers. I never know how many subscribers, but there are subscribers to the signal. It's 6 people. Look, there's 6 people subscribing to the signal. I don't know who they are. Apparently, I'm not very reliable. Don't quite know how they do that reliability, but yeah, 6 people following that signal. Heck, can start selling signals and offering you 95% strike rate. Right, Nasdaq's really struggling up at that high. The Dow's forming a gap. This feels heavy at the minute. 10-day, can I backtest the market structure alerts or have them all on from the past? No. Yeah, you can backtest it obviously in the strategy tester. So go into the strategy tester and just hit the start button on the indicator and it will just show you what it does. It won't show all on the screen though. I've been asked that before. If I was to leave, well, first thing is, how far do you go back? Second, if I was to leave every reversal alert on the chart, it would just be a mess of orange and you wouldn't know what the hell anything was. It would be a mess. Yeah, it's a signal indicator. It signals structure shifts. So they will fail. For example, we had a structure shift there, which has been invalidated. Now we've got a new one there. Yeah. So there was a reversal alert there. It went because we put in a new structure high. So it's not going to show you. If it showed you everything, you just wouldn't be able to read chart patterns or anything. You wouldn't be able to see the chart. SPX opened just at a huge call strike. Okay. Don't even know what that means. But excellent. I presume that's something to do with options. I think you're in the wrong room, Asa. This is not an options room. I don't know. We don't do that stuff. Have you tech open? Nasdaq, yeah. This is the Nasdaq. This is the Dow. Got in on nice EU RSI divergence on the 5-minute earlier. EU. Yeah. Nice divergence there. Reversal alert. M pattern retest. Very good. Euro US dollar. We've got this propulsion gap to the upside here to finish off. That's an hourly RSI extension as well. There's no downside targets really in play at the moment. So I think that could potentially come back up into there first and potentially do an ADR. See what happens with the US dollar. On top of your normal market reversal alerts EA strategy settings, can you also add another instruction to automatically close a basket pair when account drawdown hits 3% or monetary equivalent? If so, how do you do it? No, you can't do that. You can get another EA to do that. There's other EAs out there. Someone sent me one the other day. Who was it? Hamza, I think. This one. So this Equity Guard EA, there's loads of these about. You can get free ones. This one's free, but if you want to use the, it's just free. There you go. There's no pro version. So this one basically will monitor your account and it will auto close everything if it hits a specific whatever. But it also removes, it can remove the EA after an equity target is hit. I presume that is a stop. Yeah, stop EA. Different types of loss and different types of profit. Yeah, so you can just basically stick this, something like this on your account, and it will just shut it down for you. There's loads of those. That one's called Equity Guard. But there's loads of freebies like that all over the place. Pound CAD falling, about time. Yeah. We're really struggling up at the highs here. Tricky open, really exhausted today. We'll see what happens with that. We're going to have a look at the RSIs. I'm going to have a look at pound CAD as well, because I am in short on this at the moment with an aggressive drawdown control position. So I'm targeting basically this propulsion gap here. To the downside. So I'm nearly back at break even on this, just waiting for this thing to actually get its act together, which it finally seems to be doing. So looks like the Nasdaq is going long. I would imagine the Dow's getting dragged up with it. So Dow's retesting this propulsion gap here. So we'll see if we get an add. If we break that low, that's coming down hard. So there's the gap fill. Mr. Wick. Tomo, you're late. Never mind, we'll let you off. We're going to do some analysis on some FX pairs. Just a quick update on the sentiment EA. Oh, just back to load more. Very nice. I found a glitch. I was wondering why this thing wasn't banking. For some reason, it's not working. So I've got to stick it back in the strategy tester. But I've been in copious amounts of profit this morning, like loads of profit. You can see got some stuff like this is sitting in 954 Aussie dollar CAD. Look. For some reason, the 4-hour candle close isn't working. So I've ballsed up some code somewhere. I've got this set to check every 4 hours and close if we're in profit. I've no idea why it's not working. So I've got to check the code in it. But when I was saying this morning, I can't really get this sentiment EA working. I know why. It's sitting in absolute tons and tons of profit, and it's just not closing it, and it's letting it go back into drawdown and then closing out as a drawdown control. So I've got to scrap this test and start again. So this might actually have legs, because I've seen this. This got up to like 5 or 6 grand in profit today, but it's not shutting. So that's on my list to do. Nasdaq's coming down out the highs. I do prefer this as a short today. We've got lots of downside to come and sort out, and I also like the fact we've got the DAX to sort out to the bottom as well. Greg, for the market reverse alerts indicator, would be nice to have an option to show filled boxes that failed. I just covered that. It's just a mess. If you want to test it, go in the strategy tester. You can test it all in there. Or better still, get the market reverse alerts EA and use the EA in the strategy tester, and then you can test your strategies. What about my sound tool switched off? Oh yeah, I haven't got tick strike. I'm not actually trading it this afternoon, so I can put tick strike on if you want, but it's just going to make a load of noise, and I'm not actually paying attention to it this afternoon. I'm not doing any futures this afternoon, so we'll leave it off for the minute. While we're making absolutely no ground here, because Mr. Wick has entered the building. Here he is. This is just wicking out at the minute, outside bar going in at the moment. I think we'll have a look at the extensions on RSI. NASDAQ, sorry, the Dow Jones is just inside bar as well. Not really any movement in any direction. So, right, RSIs. So we looked at these mostly this morning. There's still no 4-hour RSI extensions. We haven't had any RSI extensions on the 4-hour for a while. It's gone very, very quiet. US dollar CAD is getting close, however, on the 4. So we're teetering around the lows at the moment on this, potentially for a long. So this is a really nice long opportunity. On the hourly, we've had an RSI extension already. As you can see, I'm already long from here. But that's where my entry is there. But we had a down day yesterday, and we've just filled that propulsion gap now on the hourly. So if we have a look at this, zoomed out a little bit, we've still got this area down here and potentially this low. So what I'd like to see ideally today is a big drop on this down into here, if possible, so I can get a second entry on to get out on that propulsion gap. But at the moment, it's just kind of sitting sideways. We've got a fairly strong Canadian dollar today. So if you look at the CADs, everything's come down against the Canadian dollar today. CAD yen is up, CAD Swiss. We've got fairly strong Swiss here as well, so that's kind of stable. But everything's sort of more bearish against the CAD at the moment. So that US dollar CAD would be lovely if it came straight up into there, but equally I'd like to see it go down so I can get into a second position on it, but we'll see. Afternoon, Seymour. So that's the only 4-hour that's getting close. Aussie dollar CAD isn't far away either. We're almost down at an extension on that. I'm already in that as a long. But apart from that, there's nothing else getting extended at all. So it's all flat on the 4 hours. So from an hourly perspective, we've still got these hourlies. So you've got your Aussie dollar CAD is extended to 25. Already in this one, as you can see. So I had an entry and an exit there. Yeah, re-entered again basically today. Extended again. So waiting for that push back up, back into, maybe into test that, but we've got this propulsion gap to the upside to head for as well. So good targets to the upside on it. Where I am in at the moment, if you've got in with me today on M5, you would have been in there. Yeah, then we had a new low put in. Yeah, so this is the latest structure break there, which is going now. So half an ADR target on this is 37 pips, which brings us back up to these highs basically in Asia. Yeah, so up into here. So that's not quite 37, is it? It's 30 pips up to there. So basically I'm looking for it to come back up and retest into there somewhere ideally. So, but nice looking long, very nicely extended. CAD yen, very extended to the upside. I'm already in one short on this, waiting for a second entry up there. Really nicely extended. We're basically up at the 80 level now. So really good extension. I think we're probably going to come back up, as with all these yens, which you can't see because my big head's in the way. We're going to come up to there, 125 ADR. That would be lovely. If we can get up to there, I'll take second entry there. Then I'll get out and I'll push back down into that propulsion gap. So really nice looking short opportunity on CAD yen, nicely extended. Hopefully we get a bit more extended on that one. Swiss yen, pretty much the same. In short already, fine. If it comes down, I'll get out. If not, push up into propulsion and take additional entries as we fill the gaps, and then get out as the banks take on the move. Again, nice extension up there. Euro yen, all extended again. This is what we looked at this morning. We've pushed further, so I've got an initial sell on the extension, pushing up above those highs. Target up there. Once we get up to there, we're looking to get profit take, move back down into there and exit. Again, just really weak yen today. Pound yen, lovely extension up to 80. This is one we looked at this morning with our lovely violet color. So there's your high that we're sweeping at the moment. There is the origin of the yen safe haven move, which is the same for all of these. So an ADR hit today and then push back down into this propulsion gap there. We've also got propulsion gaps to the downside. That I would class as probably filled. This one is half filled, so I'd still expect us to come back down there at some point. Again, high of the range, low of the range. We spend 80% of our time range bound. Makes sense to come back down again. So half an ADR on that is 127, which is there. Perfect. So in that propulsion gap is my target, and I'll be out there. New Zealand dollar CAD. That's extended to the downside. I've got a buy on this at the moment. We pushed up, and this was, why did I take a buy on this? Where was it? There. I think this was an ADR. Was this an RSI? Yeah, this was an RSI extension. So we had this RSI extension to the downside. Quick pullback move on that, which we were looking to be a profit take, which turned into pullback down to a double bottom. So waiting to get into a second entry down here somewhere. An ADR is 83. So I need an ADR hit basically. So with this one, we're going to have to pull out the lows for me to get a second entry back down into here or down into here. Second entry there, and I'll get out as we push back up. But that's nicely extended already. Not massively extended. We're just above the 30. We're not down below the 25 level yet. So not a massive extension if you're not in it. And US dollar yen extended to the upside. That's also an ADR hit. We've had the reverse alert. It's tanking nicely. So your reverse alert from there down, quarter of an ADR target to a half an ADR. Quarter of an ADR is 45, which is basically in the middle of this propulsion gap. That resistance, yeah, in that propulsion gap will be your target for a quarter of an ADR. If you want half an ADR, back down into there. There's your RSIs covered. That was quick, wasn't it? Nice, quick and easy one today. Pretty much the same as this morning, basically. So we are just holding the highs at the moment on the NASDAQ. This propulsion gap is holding up. We're not able to make any progress. Dow, it's all inside bars. No direction yet. We are waiting. John, Euro Swiss looks a sell, but RSI is not extended enough. Struggles through 100. Euro Swiss. So Euro Swiss, from a sentiment perspective, is a buy at the moment. So retail crowd are short. So it looks like a long. At the moment, it's a long. I'm in short. Yeah, I've got one short on at the moment. So fundamental at the moment, it's a buy basically, because obviously the retail crowd are shorting it. I am part of that retail crowd. So we're coming up, taking that liquidity at those highs, looking for a push back down into here. So yeah, it's a really nice sell at the moment. Just at the moment, it's a buy because of the fundamentals and what retail are doing. That was the entry there. That's why I'm in short. That level there to target and this propulsion gap. So if we're going to push up into there, then come back down into there, that's fine. We've got this massive target to the downside. I'm not sure about this because this is part of the Swiss franc move and the weakness we've seen. So I'm not sure whether or not we'll get back there, down to there. If you look at it from a higher time frame perspective, we are literally just chopping. Yeah, so we get big push, big pull, big push, big pull, big push, big pull, big push. Yeah, it's violent. So this is the sort of pair at the moment where you won't get into more than 2 positions on it. If you go long on it and it pushes down and you take a second, you'll be out. If you're going short like I am, it's going to push up. It's going to have a violent reaction out of one of those levels, and then it's going to push down hard again. So it doesn't really matter which way you trade it. At the moment, however, obviously, because retail are shorting, the market's pushing long. So when retail are all gone, they all flip short. Sorry, they all flip. They are short at the moment. When they all flip long, it will come back down again. Just waiting on this at the minute. What do you think about euro pound? Took a sell at 88.020. It's just nowhere at the minute. It's range bound. So we just pushed back up into that propulsion gap. They added more shorts. You just probably had a reversal out of that on M5. Yeah. So structures shifted. So this propulsion gap on that move basically got tested and dropped. So yeah, it looks good for a short where you are. But it's, you know, it's sideways. This whole thing is sideways, euro pound. Look. This is part of what I want to cover in the condensed bootcamp. Just covering stuff like this 80% of the time, and stuff that is obvious to me because I've been doing it for such a long time, but stuff that people just don't know. 80% of the time, the market is range bound. So you need to be a mean reversion trader. So scrap trend trading, things like that. Yeah. So where we are at the moment, you're in the middle of a range. There's your range low. There's your range high. Yeah. So you're in the middle of it. Go trade. It's not anywhere that you would want to take a trade because your odds are literally 50-50 long or short. At the moment, we've got an unfilled propulsion gap to the upside here. And we've got an unfilled propulsion gap to the downside here. There's literally no advantage, no edge in either direction on it. So you hit the short button, that's fine, scale in there and get out. You hit the long button, that goes down, fine, scale in there and get out. Doesn't matter which way you go, but you've got more odds of getting a single entry if you take a trade short there or long there. This is nowhere near any kind of extension. Yeah. So, you know, it's just obvious stuff. Don't trade in the middle of a range because your odds of success at the extremes of a range are very high. Your odds of success in the middle of a range are 50-50. I know which way it's going, do we? So just no trade for me there. It's just not an opportunity. But if you're going on shorter time frames, you know, like I say, I couldn't tell you which way that's going. Obviously, I can never tell you which way it's going, but I just don't see any real opportunity on it. Afternoon, Daniel. Sell on the NAS and the US 30. Well, that's what I thought. At the moment, it's going absolutely nowhere. Mr. Week is in the house. Ooh, where's Mr. Week gone? There he is. So yeah, we're not going anywhere at the minute. Look at it. It's just nasty, nasty, nasty price action. Literally, we are, what, 25 minutes now sideways. Just no indication of direction whatsoever. However, the fact that we've had two very strong pushes on the NASDAQ this morning, yeah. So we had this Asian session in the middle of Globex, we had that push, we accumulated, and then literally an hour before the open, we went crazy. Half an hour before the open, we went crazy. So we've had two strong pushes, leaving a lot of unfinished business to the downside. And we've come straight up into a previous propulsion gap from 2 days ago. Here. So we're getting stuck there. We're either going to do that or we're just going to do that, I think, today. So either way, I'd like to short it. If you want to position trade it, this is a good position trade opportunity. Get in. If we do rally, get in short. If we do rally up to there, take a second. And if that doesn't hold, ADR today is our previous resistance. So first, second, third, and hope we get a profit take move on that, which after hitting ADR, be very unlikely we don't get one. So, but the minute, it's not really giving us any clues, is it? Just wick. Mr. Witwicky. If you put the equity guard on top of the market reversal alert CA, will I still be able to test the automatic drawdown closure idea? Strategy test has got nothing to do with that equity guard EA. Strategy tester is a strategy tester. Equity guard is working on your equity, your account, your live account. Strategy tester has nothing to do with the account. I've never used it, but that's what those equity guard EAs do. There's loads of them. Like I say, there's loads I've used many of them in the past. They've become more popular now because of prop, which is why I built an equity guard system into the opening range breakout EA, just so that it's already in there. But for the market reversal alert CA, that's designed for position trading. So you don't want to shut everything out. You want to do drawdown control. You don't want to close positions. What do you think about New Zealand dollar CAD? Let's have a look. New Zealand dollar CAD. So at the moment, we've got a decent movement happening on the CAD. New Zealand dollar CAD is range bound, totally range bound. There's no fundamental bias. There's no COP bias. Ever such a short bias, a small short bias at the moment on retail. So retail is longing it at the minute. So they're pulling it back down to take liquidity. So we should get an ADR on this today. When we get that ADR, I would be going long. I am already long anyway, but I'll be taking another long down there. So yeah, good long opportunity. Long term on this, as you can see, we're just range bound, mean reverting. So take it either way. As you can see, that's exactly what I've been doing. So got a short there and out. Got long there and out. Got short there and out. And I'm in short there, out, and I'm in long there. Doesn't matter, does it? Just mean reverting, constantly mean reverting, in, out, in, out, in, out, just banking. So at the moment I'm long. And if I need to down here, I will get a second long to come back up and retest those highs. If it comes all the way down to there, I will get out when it comes back up to retest this area, which will become resistance. Again, another thing, you know, that's another thing I want to cover in the what I see this new bootcamp I'm thinking or creating is the basics. It's just the basics of position trading without all the waffle. So price moves from support and resistance. Here you go. I'm going to demonstrate it 1,000 times. That's what's going to happen if it breaks down. I'll show you examples of it, and you can't deny that support and resistance exists. Propulsion gaps exist. Propulsion gaps get filled all the time. You can't deny that propulsion gaps exist and propulsion gaps get filled. That happens all the time. Yeah, just proving concept. If you use a stop loss and you get into the market with a short position and it doesn't get down to your target, you will get stopped out. If you position trade, I'm talking like an idiot. If you position trade and you don't use a stop loss, you will get out at a profit. Demonstrating facts. Propulsion gap filled. Propulsion gap filled. Yeah, this is just what I want to do, is basically just do a short video that explains the real basics. RSI, when it gets extended, comes back down. RSI, when it gets extended, goes up. When it gets extended, it goes down. When it gets extended, it goes up. So we use this in conjunction with that, targeting these and using ADR to make sure that we have targets within that range. 4 things. That's all you need to know to make money out of the market. Off you go. That's basically the video I want to create. What I'm struggling to do is get it into a size that everybody can go, I'll consume that, because no one can be asked to do a 12-hour course for some unknown reason. So I'm just trying to help, but trying to get it into a, you lot in here, I'm going to test it on. I just need to get the slides kind of fine-tuned, and I need to run through it myself so I can make sure I can do it in half an hour, and then I'm going to use you lot as guinea pigs. I might even record that one and use that one to put on the web, but we'll see. Dirk, implementing a 1/4 and 3/4 ADR of intraday move into the ADR indicator and EA to show targets. You don't need to show targets because it gets out, doesn't it? The EA sits on the chart and runs. There's no need to see it. I don't need to see it operating. When it's in a trade, it will get me out at my target. I don't need to see the target because the target is just set by the EA. I don't know what benefit that has of seeing it. For manual trading, you don't manually trade with an EA though, do you? You manually trade with an indicator. You're talking about putting it on the indicator. I could put, yeah, I mean, I could put the, I think you find that confusing. I don't know. You're still using it as an indicator. Oh, right. Okay. Just, I don't know. I don't see the benefit of it personally. I mean, you're better off if you're better off targeting a propulsion gap, really. But I could do, yeah. I don't really want to, though, to be honest. If I'm really, really honest, I don't really want to. I've been running it for 2 years. No one's ever mentioned it. So, you know, if suddenly 100 people go, oh, that would be amazing, fine. But you're the first person in 4 years that's actually said they want to see that. So I have to go with the masses on that one at the moment. Will the indicator I sent you be of any use to you, Seymour? It almost crashed my MT4, so I doubt it. It was hideous. Am I allowed to show it? I don't want to show it in case it's some kind of secret source. But it nearly crashed my MT4. Nearly, it works. But like you say, if I stick that in an EA, I think you're going to find backtesting is going to take about 600 years. It's very, 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 very slow. What was it called? I can't remember what it's called. Super. And I don't know what the settings are either. But when I look at that. See the lag on the chart? That's not me. I'm moving my mouse at a normal rate. Look how laggy it is. It's really, really, really resource hungry, whatever it is. So it might work, but that's the one you were talking about this morning. Yeah, it's I can kind of see what it's doing. If you look at this, the way this is drawn here, what this is doing to get this shading is it's drawing. You can't get the objects list. Yeah, look at this. Look at how many look at how many triangles this has drawn. Look. Yeah. This is why it's slow, right? Every one of these little bits of blue here is a triangle. For some reason, whoever's coded this has coded a million triangles, and these are getting redrawn. Look at them. Depending on what the look back is, this calculation count, I don't know how many that needs to be, but it's set to 50 for a reason. If you set that to 500, you'll never be able to open your MT4 again. So I think if that was drawn in a different way, it'd be fine, but it's drawn using triangles. If it was drawn using lines, a little bit like this indicator. So when you zoom in on the cloud, it'd be easier to see if there's red. Yeah, you can see that this is just drawing lines like this. Triangles take 3 calculations. It's just very difficult. I think whoever's done that's cocked it up, to be honest. Umar, is CAD Swiss a sell now? No. Well, I'm in short already. Well, actually, yeah, no, it was a sell yesterday. I mean, at the moment, I would. I mean, yes, it's coming back down here and potentially down to there at some point. The best trade at the moment would be to wait for it to get up and take liquidity there and jump in short up there. CAD Swiss, I think they are long. They're short on it at the moment. Sorry, they're long on it. Yeah. Oh no, so yeah, it's a good short. No, it's a good short now. Yeah. Retail are long, so they're letting them have some money at the minute. More likely they're actually going to come back down here because they'll be hunting liquidity down there. So yeah, good short. It's just extended again. So yes, it's a better entry than I got right now. So I'll take it. If it gets up to there, I'll be taking a second. On that one anyway. I used it in an EA, but it just called the indicator values without running the indicator itself. Yeah, might work. I don't know. Hai Fuang, any thoughts on oil? Yeah. I mean, Seymour, what you'll have to do is you'll have to send me the exact inputs for all of the indicators and what the triggers are. I need the strategy laid out in really easy. If when this is over that, do this. When that's over this, do that. And I need the inputs. So what the settings for each of those indicators that you sent me is, and then I can basically try and test it. Oil. So yeah, oil, we're looking for longs. So at the moment we're stuck. So oil's gone nowhere today, look. That's Asia. That's London. And so far, that's New York. So I got out here yesterday from the entry from Friday. That was the trade there that I took off yesterday. So I'm waiting basically for a pullback on this move somewhere. So if we get an ADR hit to the downside, an RSI extension to the downside, which is exactly this, the entry that I took there, waiting for another entry basically to try and get in. But at the minute, it's just going sideways. I'm not going long on it up there. I like it long, and it might just fly. If it just does that, does it? I'm not going to short it. I think this the danger with oil is the speed of movement, as you can see. If it doesn't give you that pullback, it will just go. The difference between oil, the reason I don't trade oil and commodities as a position trader is that the banks and institutions manipulate this for gain a lot. Yeah, which is why we get the profit take moves. That's what we're making our money on, isn't it? With oil and commodities, they are driven by bank movement, but they are also driven by supply demand. So there's less manipulation, and therefore it can fly hard in one direction. And that is because of a fundamental rather than a manipulation. So they're a lot trickier to trade as a position trader. However, I've had pretty good success over the last sort of 3 or 4 months. So, but most of the entries I've taken have actually been one in, one out, or a couple. So, but I've only been pushing the long side. I've never been pushing the downside on this. And obviously that's what it's been doing. So I've just been longing it on the mean reversions, waiting for that 107 that we've been promised at some point. It's not there yet, is it? Anyway, by a long shot, 107. We haven't even got to 80. So 80 is my interim target. So I want to pull back and just ride the market structure up to there, but not from there. Looking for pounds US dollar. We are short on the general trend. And is this a pullback for a better sell entry? There is no trend on this at the moment. There was a downtrend. At the moment, there is no trend. In fact, it's ever so slightly trending up. When you look at moving averages, what you want to be paying attention to is the angle, not where price is. This is what people get wrong about moving averages all the time. People go, oh, it's above the 200, so I've got to go long. It could be above the 200, and the 200 can be pointing down, meaning it's coming down. So the angle, as you can see, we're flat with the moving averages. We've got a little bit of an angle to the upside, but that's not enough for a trend, really, for me, for long or short. So I would say that's range bound at the minute. And your range is basically range high and range low. And at the moment, we're on our way up to range high. So I'd be looking to short it with a view that either it's going to come down from there and make a lower high, and then a lower low to come back down to this propulsion gap, and this one down here. Long term, this is obviously. So I'd be looking for shorts at the minute on it. I've got a short in there, hourly. I've longed it there. I've longed it there. I've shorted it there. Longed it there. Yeah, see, at the moment, it doesn't matter. If it's range bound, this is what I mean. I keep saying this. At the minute, if you look at the buyer scorecard, the amount of pairs that are range bound is ridiculous. There's no fundamental advantage, long or short, at the moment on anything much. So if you look at what we've got, the longs, the buys, you got a couple of yen pairs, but that's based mainly on fundamentals. Look, retail are long on it. So when retail are short on it at the moment, which means it's got a long bias. When that 2 disappears, that becomes a 3, which pulls it back down into the range. So there's nothing really massively strong to buy, and there's nothing massively strong at the moment to sell. Yeah, the strongest sell we've got is CAD Swiss. That's a -2 retail. When that becomes a 0, this becomes a -4, and it's just a very, 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 very weak sell. So literally everything's range bound. It doesn't matter at the moment which direction you take anything. But obviously only get in when we've got chances of a mean reversion opportunity. So when the banks have pushed and they are ready to profit take. Yeah, pushed, profit take, pushed, profit take, pushed, profit take. Yeah. So we're just getting in and out on the profit take moves as they come. So unless it gets extended, 75, 80 short, 20, 25 long. Right now it's nowhere. 4 hour, it's nowhere either. Look. We're just sort of coming off the highs. So again, I'd be much more interested in that, because if it does push up into there, this will then get extended and we'll bounce off of that high. So shorts, but right now it's not really doing anything. So you could almost just take every reversal alert on it, really, and try and get a little quarter, half an ADR scalp, and you'd probably be all right, wouldn't you? Oh, NASDAQ. So literally, that's our 5-minute opening range. It's a breakout long, and it's gone nowhere. Terrible. Gustav, it's been interesting just listening in for a couple of days. I'm rather new in anything stock related, but I'm fond of how descriptive you are when going through trades. Cool. You got a link to some magic toolbox or resources to use when analyzing trades. It's all going along the bottom. Go to the website. Everything you need is on the website. If you're talking about the fundamental section, that's on the website. Look. On the fundamentals. All this lot. It's not a magic toolbox. It's just fundamentals. That's fundamentals. And obviously, every trade I take is taken with the Market Reverse Alerts EA. And the Market Reverse Alerts EA executes what I teach in the Position Trading Bootcamp. So it's all on the website. NASDAQ coming back down to test the 5-minute lows. I think this might be our peak formation high. So if you're going to get into this short, which it looks like it wants to do, I would probably keep a wide stop on this. If you try and trail stops on this, I get the feeling we're going to have one of those days where it goes like that. It's going to be very, very difficult to get any money out of if it goes short. At the moment, this propulsion gap's holding. Look, they're buying it. So it could be another leg up. This is exactly the same as the DAX this morning, isn't it? This market's dead at the minute. It literally is. These markets, when it's like this, are very, very, very difficult to trade. You've got to basically build a position and then get out when they push, and that's it. And if you are not on that move, they just don't let you have anything at the minute. It's kind of, you've got to flip a coin and hope that you're right on the direction. It's horrible for the indices at the minute. I'm getting put off them at the moment. The market's scared to death. You can see on the daily charts, look. Yeah. Push down. Look at these wicks. Huge long wicks. Bull move. Immediately into a bear move. Push down on the bear move. Put in a bullish candle. Have a bullish day. Have a bearish day. Doji. Bull. Tiny. You can't trade it. There's no volume. Yeah, they're all the same at the minute. The markets are just flat. Horrible. Look at this. It's almost like we're returning back to a bull calm market out of a bear volatile, but you need a crucifix and half an onion. Yeah. It's a nightmare. Starting to look like we're coming out of the lows now, though. Have I covered everything up there? Do you put a stop loss on oil? Nope. I don't put a stop loss on anything. Apart from scalps in there. I don't use stop losses at all. You use a stop loss, guess what happens? Everybody at once. You get stopped out. As it's coming down yet. Well, till we break that 5 minute. I would imagine the Dow has already done that 5 minute low. Just about, look. Just about out the lows. But look at it. Straight into propulsion. They're buying the propulsion gap. It's just, there's no there's no speculative buyers or sellers in this market at the moment today. They're not able to get any moves in. So Tesla down. That might be why it's, well, unless Tesla's gone down in the last 15 minutes, it's got nothing to do with it because the market's shot up today. So last week, I long entry on euro yen, immediately fell around 400 pips. Did Braveheart hold over the weekend, and today sold with a 50 pip profit. There you go, Nasir. Crude oil inventories are out. Wait for the chart to update. So crude is running, looks like it's running to the upside. 5 minute chart's not updating. A bit of a bull move happening off of the inventories. So yeah, that's it. Euro yen. Took a long on euro yen, yeah. Immediately fell. Right, so you're probably in very much the same trade as I was that long there. And it fell. Out. Again, this is what, this is, to me, it's totally obvious, yeah? The market moves in an average daily range. That's the average daily range of the market. If the market is going to drop, in this case, 247 pips, why would you worry about it? It's totally normal. It's within expectations. If you go long here because you think it's going to go up and you put a stop loss in the market, all that's going to happen is you're going to get stopped off. The market's stopped out. The market's going to go where the market's going to go. It's got nothing to do with anything that you have control over. So the only thing you have control over is what orders you put in the market. And if you put an order in the market to get you out of the market with a loss, you'll get out of the market with a loss every time, or 50% of the time. If you stop taking those losses, you'll just start banking loads of money. The market is going to move up and down, in this case, around about 247 pips a day. We know that. Why would you put an order in the market within that range that says get me out at a loss? Look at it. It goes up and down like that all day long. It's nuts. Look at all these trades that long would have been stopped out. Exit. Long, perfect. Take that one. Long would have been stopped out. Exit. Short, perfect. Long, massively stopped out. Exit. 5 profit, 6 profit. No, 1, 2, 3, 4. I can't count. Helps in this industry if you can count. 5 profitable trades. Do I need to prove the point anymore? Short. Look at that one. Short. Pushed up. Pushed up. Definitely stopped out there. Entered again. Out. 6 profitable trades. Nasir, welcome to the 5% Club. Daniel, I like NAS more for a sell. So do I, definitely. I liked it for a sell at the open. When it started putting in these John Wicks, that move, I thought it might be a breakout, but no. So market structure now is obviously short. So there's your high, low, high. We're still putting the low in. So let's say that is our low. There's an entry short there. It's quite difficult to get into, but or just pending order under that low, go short. Decent stop somewhere up there. You should be all right. Targets wise, we've got 3 targets to the downside. That one there, that one there, that one there. And then we've got the gap fill here. So there's lots and lots of downside to the gap fill. The DAX as well has that gap fill in play still. Same story with the gap on the DAX. Yeah, we're coming back down to there. Same as we did 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 there. And the same as we will do here. It's short. Definite short. Just don't know when. Familiar with the FXSSI toolkit? No. I know they've got some fundamental retail sentiment indicator, haven't they? Yeah, I am familiar with that bit of it. I don't know much else, but yeah, I know they've got a sentiment toolkit, a sentiment indicator rather. Figinia, stop loss. I have the scars to prove it. There's a guy I used to trade with, and he used to basically call the stop loss death by 1,000 cuts, and it really stuck with me. That was the thing. One of the things that really nailed the coffin basically was the death by 1,000 cuts thing. And it's not until you remove the stop loss from your strategy and you realize how effective your strategy is that you suddenly realize where you've been going wrong all these years. It's so simple. Oil inventories are out. Really good news for oil, but reactions are very poor. Oil news has nothing. Inventories on oil have nothing to do with oil movement at all. It really doesn't matter which way the news goes. Oil goes wherever the hell it wants. This is why I've stopped paying attention to the oil news, because it doesn't make any difference whatsoever. It really doesn't. They just basically move wherever they want to on the inventories. So this could go either way. Hopefully this will come down. I'm looking for an entry long. So I'll be very, very happy for this to drop today. If we get an ADR on it, I should be long. Definitely. Is there a Discord for the channel? No, it's Telegram. Haven't got a Telegram link, have I? In the, I'll put a Telegram link in there. Bear with, bear with. I need the Telegram link. There's the link to Telegram. If you haven't got Telegram, if you already use Discord, no, can't help you. There you go. Telegram link will now appear in that chat box thing at the bottom. Scroll up rather. June, what is your settings for your reversal EA? They're all linked from the product page here. So on the product page on MQL5, there is a link to some good set files to get you started. There are the latest set files that I'm using are in the Telegram group as well. They're all called _Lee in the file section. So they're underscore, it's these ones here, look, in Telegram. So these ones in the file section. Those are the set files I'm currently running. Very, very, very similar to the ones that are linked on the blog post. That's the signal. Yeah, so there's on this blog post basically, which is linked from the product page. That gives you all the strategies, and the set files are down there. Nasdaq's coming down nicely out of the lows. Oil's coming down as well. Have you ever looked into ChatGPT for coding strategies for EAs? Yes, I have. It's helpful, but I don't really need it. So, but you'll find it very, very, very long-winded. It took me, oh, that chat's all gone wrong now, hasn't it? One sec. Let's make that shorter. So, mucking about with the stream live. Should really do this later, shouldn't I? But I just noticed it's all crashing the. No, I've done that wrong now. Right, bear with me a sec. Let me just get it where I want it. There we go. 97 people, sim behind the scenes. That's what happens in streams. Yeah, ChatGPT, basically what you'll do is you will find it incredibly laborious. So I tried to code a simple RSI extension EA. So it would basically trade when we cross back above the RSI low or high. Then I asked it to do inputs for me. Then I asked it to do a certain risk and do this, that, and the other. And I was working on it for a good hour or so. I could have coded it in 5 minutes. So it's okay for people that don't code, but to actually get it to a stage where you can have it usable, yeah. So for an EA to be any use whatsoever, you're going to need a load of inputs that you can use in the strategy tester to back test and out of sample test. You're going to need to do system parameter permutation tests. You can't build something like this in ChatGPT without a massive amount of work, massive amount. And time. You'd be better off spending $300 and getting a coder to build it for you, and they'll have it knocked out in 2 or 3 days. Honestly, it's just it's great for things. I've used it a couple of times when I've had problems. So I've been like, why is this not working? And I've put code in there. I've said, this doesn't do X, right? And then it goes, this is the code you need. And it rewrites that bit of code for me. And I pop it in and go, brilliant. And that basically saves me going to Googling it, going through 15 different forums to find the one that is actually the instance that I need the problem fixed for, and go in there and actually implement that problem. That will take me half an hour. ChatGPT can do it in 10 seconds. So it has a lot of uses in that respect, but it's not going to replace the coder at the moment. But yeah, I mean, it will. I mean, who knows what it's going to do in the future? Could do all sorts of stuff, couldn't it? I will trade. I trade with 100 X leverage without a stop loss. My liquidation price is my stop loss. That's exactly what I do, Tamo. So I've got 1 to 500 leverage. So anything for position trading, 1 to 100 leverage is basically your full account. They will stop you out at 50% margin call. If you get to a margin call, you've really gone wrong. Yeah, I'm sitting in 11 lots of size in this account, and I'm in 3% drawdown. So if you get yourself to a margin call, something's gone horrifically wrong with your strategy. Okay, Nasdaq's putting back out the propulsion. So there's no real propulsion gaps to look for. So some kind of pullback on there, short back down into here, and then obviously potentially out the bottom. Oil's coming down very nicely. Needs to be a lot lower for me. And one thing. I guess a retest of the reversal alert would be ideal. Or potentially that's a 38 retracement. So if it bounces off that high there, potentially that might be a nice initial entry. Failing that, this here has been respected multiple times as well. So the 61.8, that is also a propulsion gap that was tested. So potentially that 61.8 level or that 38. See if it gets there. Just going to set an alert at that level. Actually, what I'm going to do is, yeah, I'm not going to bother. I'm just going to, actually, no, I need to set an alert because I haven't got oil monitored. 70.86. Okay. So I basically just set an alert at ADR. In fact, I should just be using the ADR reversal indicator, shouldn't I? But I'm not. There's no Discord, no. 5,000 members in Telegram. Yeah, I've had 5,000 members in Telegram forever. People keep leaving and joining and leaving and joining and leaving and joining. So, but yeah, no, I've had lots more. A lot of those are bots, though. There's a lot of bots in Telegram. Dark, not working though. What's not working, Dark? Were we talking about something? What's not working? Clarify. What's my background? I'm a programmer. Right, well, I was a salesman about 25 years ago, then programmer, web, and then I started trading to make an extra income when children arrived, and that was 15 years ago. The rest is history. Derp, come on, 44 likes. We've got 96 people in here. Let's get some thumbs up. I use ChatGPT for business breakdowns, for yearly reports, and some shares. There's loads of you. I mean, ChatGPT is going to revolutionize a lot of stuff. How much humans it can replace. There's a bot that came up on my Facebook feed the other day, an advert, and he said basically they're using AI. You know, we've had this before with Agimat, the neural network, which is basically 3 indicators chucked on a chart, covered up, and then puts arrows. Same thing, basically. So there's loads of people now going to start ripping people off in trading, saying that they've developed AI-based strategies. It's not going to happen. It might do at some point, but the Telegram link redirects you to this site can't be reached. No, it works absolutely fine. I just clicked on the link in chat and that's where I've got to. Yeah. Yeah, it works fine. There's nothing wrong with the link. Go to the website if you want. If you go to the website, there's a link up there. Look. Telegram. There's links all over the site to Telegram. There's this massive box. All these links, though, take you to the same place. So if the link's not working for you, I don't know why, but there's nothing wrong with the link itself. That's fine. It's fine for me anyway. Hi. Wealth Tour, welcome aboard. We haven't had any subscribers today, have we? Interesting. Why is no one subscribing? Everybody's subscribed, obviously, aren't they? Do you trade all RSI and ADR signals, or how do you choose your pair to trade? Do you have some favorite FX pairs? No, I trade everything. Trade everything that comes up at the minute. But obviously, some trades will be doubled up. So, for example, if we look at an ADR today, pound odd. Yeah, so pound odd was an ADR this morning, look. Yeah, so we pushed up, hit ADR, got the reversal alert, down, straight to propulsion, profit take, done. That's a really nice one, wasn't it? There's your entry. Half an ADR is 61. That's 76. So you basically half an ADR straight down. Lovely. But if you look at that ADR there, so there's your ADR reversal. Also liquidity run, yesterday's high. The EA would have taken many trades on this actually. The EA would have taken a yesterday's high, would have taken an ADR hit, and it would have also taken an RSI extension. Yeah. So whenever you get ADRs, if they're parabolic like that one, which is a big, strong upward move, 5 hours straight, nothing but buying, your RSI most of the time will be extended. So if you run the H1 M5 and the ADR reversal and yesterday's high, in this case, reversal strategies, which is 3 of the strategies on the website, look. And these are the ones which are covered in the bootcamp. So your mean reversion, yesterday's high low, and ADR reversal. So if you're running all 3 of those, you would have taken 3 shorts on that today. So what you need to bear in mind is if you are running all 3 strategies and you take 3 shorts there, your exposure on the pound short is 3x, and your exposure long on the Australian dollar is 3x. So if the pound was to rally hard, you're going 3 times more into drawdown than you would if you'd just taken 1 entry. So you've got to be a bit careful if you're running all 3. So what I would suggest is that you split if you want to run all 3 strategies on one account, split the risk down. So knock the risk down on the EA to 1/3 of normal. So I run 1/4%. So you'd probably run maybe 0.1% instead of that. So you'd run 0.1% on 3 different strategies, giving you a 0.3 exposure. Or just run 1 strategy, or split your capital into 3, yeah, and run 1 EA on 3 different accounts. So run ADR reversals there, run H1 M5 there, and run yesterday's high there, or H4, or hedging there, whatever you want to do. So have 3 separate pots of cash. That way the risk is going to be put separately onto those 3 accounts, but the risk is going to be correct for the account size that you're trading on. Just got to be smart with it, basically. Don't get massively overexposed. Otherwise, you could be in trouble. But also, it will make a lot more money. Yeah. So that one today, that pound odd, is a perfect example. If you were targeting half an ADR, which is 61 pips, yeah, and you got in on that M5s on ADR, RSI, or yesterday's high, you had 3 profitable trades there. All 3 strategies work, obviously. So, but some will work, some will others, and some will trigger and others won't. Sometimes you'll hit ADR and you won't hit RSI. Sometimes you'll hit ADR and you won't hit yesterday's high, because yesterday was a massive down day and ADR to the upside. So, for example, if you went 200% down one day and then you went 100% up the next day, so you had a 200% ADR hit to the downside and then 100% ADR hit to the upside, obviously you're nowhere near yesterday's high, are you? So you would take an ADR reversal there and possibly an RSI reversal, but you wouldn't take a yesterday's high reversal because you don't get to yesterday's high. So the strategies are all going to be in sync sometimes and out of sync other times. So you just got to, most people pick one. My bread and butter is H4M15. At the moment, the H4 strategy is just not doing anything. It's sitting there. Look, this is H4. It's flat. We haven't had any H4 RSI extensions for 2 days, so we haven't taken any trades. What can you do? However, H1 is flying. Loads of opportunities on H1 because the ADRs at the moment are massively contracted. We're really tightening up. Market's flat. It's almost like it's summer. It's not. So God knows what summer trading is going to be like. It's going to be dead, isn't it? It's going to carry on like this. So the more leverage, the better when it comes to position trading. 100 or higher is absolutely fine. You won't need more than 100. And most brokers will give you 100. So, Tamo, how long have I been live streaming? What, today? 1 hour, 33 minutes. I don't know. 2 years? Doesn't say how many it doesn't say how many videos. I don't know. Long time, look. I don't know. A long time. A long time. I'm very old. Sorry. I've been live streaming longer than that because before I was streaming on YouTube, I had a Telegram. How was I doing it before? I don't think there's anybody in here from those days. But I was previously streaming on something else. Can't remember. I don't know. I was streaming on something else. So yeah, years, many years. Many years. Bard is better than Chat GPT. Thanks for the follow. Welcome aboard. It's a Chinese name or Oriental name of some description, and I can't read it. So welcome aboard. Thanks for subscribing. But I don't know who you are. Bard is better than Chat GPT as it uses real-time and up-to-date data sets. Chat data sets finished 2021. Not version 4, they don't. The latest ones, they're up to date. However, I think you have to pay for the latest ones, so Bard might be... Bard is Google's version, isn't it? Which apparently some engineer says has become sentient. Ed 209's coming. Yep, doesn't work for me. I guess it doesn't work in my location. Yeah, it might be that you're not allowed to use Telegram where you are. It's just a normal Telegram group like any other. So if you can't use Telegram for some reason, then I guess it won't be working. Rob, you're off. Goodbye. DAX breakout was not happy today. No, DAX was awful this morning. So this is the DAX this morning. So that was your 15-minute opening range. That was your 5-minute opening range. That was your pre-market opening range. So it's just an utter mess. I left it alone there. And I'm glad I did, because if I had have taken the 15-minute breakout, I literally would have sat there all day. Yes, it would have worked. So the 15-minute ORB today, it didn't even get a break until, what's that, 2 hours after the open? So it sat sideways for 2 hours, basically. It's useless this morning. But you get days like that. There's nothing you can do. And then you get days where it flies and you make 5, 6, 7 grand. You know, it's just swings and roundabouts. It's a breakout strategy. They only work 30% of the time. So, yes. How long have I been trading? 15 years. Bard is not as accurate, though. I've not used Bard yet. Daniel, gold for a sell. Daniel is the first today. Daniel is the first to mention it. I need to get my wick out. Oh, wrong one. Where's he gone? There he is. Gold. Someone's mentioned gold. This is what John Wick always comes out in his gold suit whenever gold's mentioned, because I don't trade gold. But I always analyze it because everybody asks for it. Gap fills just, oh, that's not a gap fill. Sorry. Gap's all the way down there, miles away. That's coming down nicely there. So yeah, gold, we're looking for shorts. Well, I was looking for shorts on this. So we're actually, that looks like it might be a pretty perfect symmetrical triangle there. Let's have a look. No, not quite. So that looks like a nice symmetrical triangle. So you got your 1, 2, 3, 4, 5 signal. So that is your symmetrical triangle formation. So we're contracting at the moment. So next move is going to be that or that, obviously. Targets at the moment are all to the downside. Yeah. So we would obviously, this is just a US dollar cross like any other cross. So as US dollar powers up, gold is going to start to come down. The only thing that's going to scupper this is if we get another safe haven run. So if we get another safe haven run, obviously gold is going to go up. So when the yen gets bought into, when a bank goes pop, everybody buys the yen, everybody buys gold. So there's an upside target there. So from a symmetrical triangle perspective, if you were to look at this, it's not exact, it's not right mathematically, but you know, it is right from a visual perspective. So we've got this propulsion gap here. So we had this accumulation break, which acts as a propulsion. So we're going to push into that propulsion gap at some point. It would make much more sense for the market to take that inefficiency and move down, which means these targets are on. We've also got a gap to fill. So it's definitely coming down. However, we need some catalysts. And the reason we're not moving much this week is because we have no news. Yeah. So the calendar's bare this week. We've got CPI for Germany tomorrow, and we've got GDP for the US dollar. So there is potential movement for the GDP tomorrow for the US dollar. And then we've got Canadian GDP and PCE on Friday. So we have got 2 news catalysts coming up for the US dollar. But these are the first 2 this week. We had consumer confidence doesn't do anything ever. So tomorrow and Friday are probably the news days that are going to move the US dollar. So we're waiting at the minute, which is why we are doing what we're doing. There's no news. And everything moves on news. That's what drives the market, fundamentals. That's why I got this whacking great part of my website all about fundamentals, because this is basically what drives the market. If you don't understand the fundamentals, you can't understand the direction. So You need to get that bit down. But yeah, down. I like 1970.33 entry. As you're already in it. Yeah, so I'd be looking, just watch that area. And obviously, potentially, let's have a look at retail sentiment on gold. There's no bias. There's no bias at all. Look, it's 50-50. So there's same amount of shorts as longs, so there's no directional bias whatsoever. Again, retail moves the market. Yeah, when the market needs to go and find liquidity, it goes to retail to find liquidity. There is no retail sentiment, therefore there is no movement. News tomorrow, that will move tomorrow. 1 gold, 0 bro. Yeah, we haven't had any bros yet. We haven't had any bros today. It's the first gold, no bros. Although Daniel comes in here regularly, so I'd never know whether people who regularly come in here and ask for gold are actually having a joke or whether they're actually really interested in gold. But it seems like Daniel is short, so it's a quick scalp. Yeah, well, if you're scalping it, it's fine. But I don't think there's anything such thing as a quick scalp today. It's a scalp, but quick, I'm not sure. It's just not moving. Look at this Asian session. So the Asian range today is 142. So that's just over a quarter of an ADR. The London range is 105. ADR, a quarter of an ADR is 103. So that's a quarter of an ADR. New York so far, we've put in a quarter of an ADR. Not moving, is it? It's dead. Dead at the minute. So we've got propulsion gap test going on at the moment on the NASDAQ. Did you say breakout strategies only work 30% of the time? Yes. Running ORB DAX only on 5K my Forex funds. Now spooked. Well, you shouldn't be spooked if you've looked at the back tests. Look at the back tests on the ORB. Yeah. So if you look at the back tests for the opening range breakout EA, which is this page here. Yeah, look at it. It's a long-term edge. All trend strategies. And this is, again, there's a video about this on the website in here. Go and watch this video here. Mean reversion versus trend trading. 31 minutes long. Yeah. That would explain why I am a mean reversion trader. Yeah. So when you look at the back tests on the opening range breakout strategy, they're all profitable. Yeah. So there is a profitable curve there, but it's a trend breakout strategy. Yeah. So you will see an awful lot of losses, stagnation. Yeah. So stagnation period of a month, maybe. Yeah. Look at that. Look at the losses there. And then bang, 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 losses, bang, losses. Yeah. Breakouts. Breakouts are highly profitable when the breakout occurs, but you're trading a strategy with a 20 to 30% success rate. So 7 out of 10 trades are going to lose, but the ones that work are going to pay massive. But saying that, the ones that are losers do not have to be full stop losers. So most of the strategies on here have trailing stop losses. So you don't take a full loss on the strategy, but the strategy is long term. Yeah. So this is a strategy you put on an account with 50K and then you come back to 75K at the end of the year. It's a 50% return. Yeah, I mean the set files are beautiful. Look, the strategy is totally sound, but you got to wait. It's not a strategy you're going to make a fortune on. It will give you 5 or 10. If you run it on 100k prop, it will give you 5 grand a month, maybe something like that. Which, you know, is fine, but don't expect it to give you 5 grand every month. Some months you're going to get 20k out of it. Some months you might make a loss. That's how you play prop. You're going to blow accounts and you're going to make loads of money on them. Mean reversion strategies, on the other hand, have a 70 to 80% strike rate. Well, they don't. They have about 65% strike rate to 70% strike rate, which is why I trade mean reversion. Again, all on the website. If everybody in the world went and took a week off work and just went and watched everything on the website, you'd just be profitable because you'd know exactly what you've got to do to make money in the market. It's not hard to extract money out of the market. It's very hard to extract money out of the market if you use a stop loss, because you're putting an order in the market that tells the market to take you out with a loss. How do you expect to make money if you walk into a bank and go, give me 100, here's 200 back, walk out and go, can't afford the rent? Of course you can't. You're just giving it to the bank. Why do you think putting a stop loss in this chart is going to have a positive effect on your account? Just need to know how to manage risk. But don't be worried about it. Don't be spooked. I mean, the opening range breakout EA is great. I've passed prop with it. But you will only pass on the good weeks. Yeah. So if you start, I've been through this before. If you start a prop, let's look at the chart, right? Can't see that. So this is gold, right? This is Monday, Tuesday, Wednesday, Thursday, Friday. If you started an evaluation on Monday, yeah, and you got a lovely breakout, brilliant. And then Tuesday, you got a lovely breakout, huge. Wednesday, you got an amazing breakout, lovely. Yeah. Thursday, it was choppy. Friday, massively choppy. Yeah. Monday, fairly nice breakout. Tuesday, massively choppy. Today, massively choppy, right? If you started your evaluation on that Monday, you had 2 massive days, possibly passing an evaluation. If you didn't, the third day was another massive day. So you had 3 days, all winners, 15k profit on a 100k account. Yeah. If you started your evaluation on the Thursday, however, you had a choppy loss day, and probably 5 to 7k in loss. And then you had a good day where you made maybe 3 backs and you're sitting -2. Then you had 2 chop days, which were -5Ks, you're sitting in -7.5. Yeah. The difference between starting your evaluation on a Thursday and a Monday is a pass or a fail. And this is what people don't understand with prop. Your strategy has got nothing to do with whether you pass or fail an evaluation. Whether you pass or fail an evaluation is down to whether or not your strategy has an edge on the days where you start your evaluation. Yeah, I have done not hundreds, but 50 plus evaluations. And it's exactly the same as taking a trade. It's exactly the same as me taking 50 trades, taking 50 evaluations. If I use exactly the same strategy on 50 evaluations, 25 of them will pass, 25 of them will fail, because my strike rate is 50%. Yeah, my strategy will work or not work depending on whether the market goes the way I want it to go or not. This month, 15% profit. Brilliant. Next month, haven't got a clue what that's going to be. It could be 3% profit. It could be -5. It could be +25. But I have no control over that at all. I place the orders in the market moves. If the market moves in direction, I put money in the bank. If it doesn't, I scale in and manage it. Yeah. Whether I pass prop or not has got nothing to do with me the EA, the strategy, or anything. It's down to when I start taking the evaluation and what happens the days after the evaluation starts. I've got 10 days, 5 for stage 1, 5 for stage 2. I could pass stage 1 in 3 days, sit there for 2 days and go brilliant. Start stage 2 and have 3 massive losers. Yeah. Has that got anything to do with me as a good trader or the strategy that I'm trading? No. It's got to do with the day that that started. That's the big thing that people don't get. The opening range breakout EA, people have sent me Telegram messages saying, my God, I've done 15,000 on it this month. Fantastic. They've withdrawn. Brilliant. I've got people emailing me with exactly the same EA and exactly the same strategy, telling me it's failed an evaluation. Of course it has. You had a bad run, or you had a different stop loss, or you took the 15-minute pre-market instead of the 5-minute. The guys that passed took the 5-minute, you took the 15, and 15 was choppy. You can't predict the future. Yeah. So you're going to get different results with everything that you do. If on everything, if it's your account, a prop account, yeah, there's nobody that can tell you what anything's going to do in the market. It's random. Every time you press the button, there's a 50-50 chance. The market goes up, the market goes down, and it moves through time. It's 3 constants. Yeah. So don't be worried about it not working. Just play the edge. The edge is long term. The edge will play out. But we don't know when the edge is going to play out, which days. So this is why you have to take multiple evaluations, because if you run, look at these 3 accounts, for example, 4 accounts here. So I've got 4 accounts running at the minute here on H1 hedge, which has done 14%. Mean reversion has done 7%. H1 has done 15%. ADR reversals has done 25%. Pretty much the same strategy there, all using the market reverse alerts EA, all using mean reversion. One's done 25, one's done 6. Next month, if we get a volatile market, the H4 mean reversion will do a lot more profit. ADR will go into a lot more drawdown. I have no control over what's happening in the market, but I know that the edge is there for all the strategies. So you play them all. If you run 4 of these strategies on 4 different accounts, you'll get 4 different results. What they will be is nothing to do with you, me, the EA, or anything. It's down to the market. You can't control your destiny, if you like, in trading. So you get in, you get out. There's a symmetrical triangle forming right now on the gold. Yeah. You could hit the buy button and go for, we saw that one there, didn't we? Which broke there. Yeah. You could hit the buy button now, or you could hit the sell button now. It's either going to break long or short. Who in the world can tell you which way that's going? No one. There is nobody that has a crystal ball, apart from John Wick, who does have a crystal ball and an 8 ball. But even he doesn't know which way the market's going to go. Yeah. So when you stop trying to guess, and you know, this on the website, there's this 5 steps to becoming profitable. Yeah. If you haven't read this, go and read this. It's free download. Just go and get it off the website. This here, step 5. This is where I am, right? Autopilot. A lot of people are sitting at incompetence. They haven't got a clue what they're doing. Fine. Everybody's got to start. I started here. Then you move up to conscious incompetence, where you know you're doing things wrong, which is good. You're making steps forward. So you stop doing things that stop you making money, which is conscious incompetence. You're still no good at it. You're incompetent and you're still trying different things, but you know you're doing it wrong. Then you get to that eureka moment where suddenly you'll do a course, you'll read a book, you'll buy an indicator, or something goes, I get it. And then you get overconfident, expose yourself too much to the market, and the market kicks you in the arse and brings you straight back down to step 3. You know what to do, and now you know where you went wrong, and then you become autopilot. That's the point where you suddenly realize you've got no control over this thing. Every trader in the world that makes money has nothing special. They just know how the market works, how the market moves, and they have an edge that extracts money from it. They can't guarantee whether they're going to make 10 grand or 100 grand. What they can do is execute their edge. And as long as their edge is still playing out, you withdraw. It's as simple as that. And that's basically what the EAs do. That's what all the strategies that I design do. But they will all have failure rates. They will all lose money. I will have losing months. But no one doesn't have a losing month. There's no trader in the world that has a P&L which is positive for 12 months on a row. It just doesn't happen. Because the market's going to change. And if I do not change with the market fast enough, the market will kick me in the arse. That's the reality. There's no holy grail indicator. There's no holy grail EA. There's no holy grail strategy that has a strike rate that is consistent. A 50% strike rate strategy with a 2-to-1 risk reward, yeah, will lose 50% of its trades. If you take 100 trades, there is nothing statistically that will say that you will not have a losing streak of 50 in a row and then 50 winners. Do you think you'd hold on to that strategy after the first 10 losing trades? No. The next 10 winning trades will get your money back plus 10%. But you won't hold it because you get 10 losers in a row. This is all because you're at a level of conscious incompetence. I'm not saying anybody in here is, but that's what that level is. When you get to the point where you suddenly realize this strategy works, I've just executed badly, or I've just hit a bad run, that's the moment you go, get it. And you'll hit that moment. And that moment is for most people in this bootcamp. Because the bootcamp is the way the banks trade, the way the market works, yeah? So go watch it. That was a long waffle, wasn't it? That was all about basically having a 30% strike rate on trend-based strategies. You know, again, a lot of people don't know that trend strategies. Look at the market. Not gold. Look at most markets. Yeah. So this is a trend. Yeah. This is range bound. Price discovery. Forming a large range. Yeah. Look at things like, I don't know, the yen pairs. Yeah. It spends most of its time going like that in some shape or form. That is still a range. Yeah. That is a trend. But 80% of that trend will be formed by ranges, price discovery, range, price discovery. Range. People call this a trend. What it's actually doing is ranging 80% of the move. You have that bit there, which is your trend move. So the trend traders enter there. They sit there for half an hour on a 5-minute chart, waiting for that move to get out. The range bound guys are going like that in that half an hour, taking 10 trades and banking a load of money, because that's the way the market moves, up and down, up and down, up and down. And on higher time frames like this, look at this. What's it doing for, I don't know, 3 weeks? What's it doing for 3 weeks? What's it doing for a week? What's it doing for another week? What's it doing all this week and the last week? Yeah. Look at how much range there is on there, and look at how much trend move there is. This is a big V-shaped recovery there, but yeah, look at the squiggles, how much squiggle there is compared to how much push or pull there is. It's range. That's why you need to be mean reverting, because you will be sitting in accumulation more than you will be waiting for the breakout. When you refer to retail, are you talking about the speculators category referred to on the COT data? No, retail is retail. Retail is broker data. So the retail on here, on this combined sentiment, when it loads, I've got one up. So this is COT in blue. So there's a long bias, there's a short bias, these are neutral bias. This is retail. So COT, this is the speculative COT positioning. So this is these guys down here. So this is the futures market. This is the non-commercial futures market, which is the speculators in COT. So this is the speculative COT positions. These are the guys that are looking to make money out of long-term movement in the market. So these guys are usually right because they've got a field of analysts telling them which way to go. So this movement is usually correct. Long-term, 6 to 12 week. Retail is your brokers. So these are people like IG. Yeah, so IG, for example, they publish all of the positions of their retail traders. So does Axie, so does Dukoscopy, whatever you want to call it. I never know how to say that one. There's MyFX Book, there's Forex Factory. There's loads and loads of brokers and sites that publish retail positioning. So what that is an amalgamation of that data. Yeah. So we know that Euro Yen at the moment and Euro New Zealand, for example, retail crowd, retail traders who trade with retail brokers, which is where this data comes from, are short. Yeah, so if you look at Euro Yen and Euro New Zealand, yeah, it's going up. Yeah, and Euro Yen at the moment as well. Going up. Yeah, because the retail market are short, which means that the liquidity that the markets, that the banks require to execute their commercial positions is sitting at the high side. If the retail crowd were long, all of the liquidity would be sitting at the low side. And what is liquidity? Stops. What don't we use? Stops. Why does it work? Because we don't get hunted by banks. And banks will continuously move up and down following retail, which is what we call market structure. And as long as market structure exists and retail traders exist, the banks will hunt that liquidity. If they're hunting the liquidity, we can identify when their liquidity runs are going to end, and that's where we enter the market. That's what the mean reversion is, and that's what the whole strategy that I execute is based on, is bank movement. So that's what I class as retail. You and me, I'm a retail trader. I'm a retail trader. I trade with a broker. So I am retail. I'm part of that statistic. However, because I know that statistic, I am a conscious, again, going back to that PDF, when I'm trading in the direction of retail, I am consciously incompetent. I'm wrong-footed. I know that the banks are going to go the opposite direction to retail. If I am the same direction as retail, at least I'm aware of it. I'm incompetent for going that direction, but what might have happened was I went that direction when they were going the other way and they flipped onto my side, which unfortunately I can't do anything about. If they jump into bed with me, they've just basically stuffed me, haven't they? Nothing I can do. I'm consciously incompetent. However, because I've had the eureka moment, unlike retail, I don't put a stop loss in the market and I just wait, like that one, for the banks to finish their stop run. And because they have pushed down, they have to take profit on their move and I exit on their profit take. Every time the banks push, the only way they can exit their positions is to become a pull. Yeah, if they're buying, the only way they can exit with a profit is to sell. So if there is an equal push, there will be usually around about a 50% pull in the opposite direction, which is why Fibonacci works. Because half the guys that did that are getting out. If we know when they're going to get out, we get in. Bang, easy. It's not that easy, obviously, because it doesn't work like that all the time, but a lot of the time it does. Someone's joined. Zippy, welcome aboard. Thanks for joining, subscribing. hit the bell button so you know when I'm streaming. Can anyone view the bias on your website? Yeah, it's all there. Just go to the website. There's a link literally just above your head, Frederick, in the chat. There's a link to the website. That link goes to the bootcamp. But when you land on the bootcamp, just click on the fundamentals. It's all free. Everything on the website is free. Just go and look at it. The only thing that's chargeable are the indicators and the EAs. But all the information, everything, the training, everything in there is all free. Seymour, you off? You've probably gone now because I've been waffling for half an hour. Bye if you're still here. If you're not, and you're watching the replay, bye again. Is it true then when putting a take profit, that is also an order in the market like putting a stop loss? Yep. There's two types of orders that the retail crowd will hunt. They'll hunt a stop loss, a pending order entry, and a take profit. It's an order. Basically, the thing you've got to realize about the banks is when they're executing, there's two main types of orders. There's commercial orders and there's speculative. Yeah. So your commercial orders are the orders that the banks have to execute. They are told to execute this. So Microsoft will phone up and go, "Hi, it's Microsoft here. We're just buying a load of stuff from Japan. So I need 25 million US dollars transferred into yen, please." And Barclays will go, "No problem. We will do that for you. We will exchange long on US dollar yen." They don't care what price they get at all. Yep, they have been told by Microsoft to execute an order for 25 million US dollar yen long. Done. Or short, whichever way it works out. Depends which way the money's going, obviously. So that commercial order will be executed. The speculators, the speculative desks, the prop desks, the FX investment desks, and that will jump on board. But their job is to make money. So they are interested what price they get and what price they get out of. But they do not use a stop loss. So the commercial guys, right, have got a load of orders to fill long, and they need somebody, you, me, an institution, a bank, someone to be on the opposite side. If I want to buy it, there has to be a seller, because I can't buy it if no one's going to sell me the order. And likewise, if I want to sell an order, there's got to be someone on the other end to buy it. So what happens is they execute that $25 million order in small chunks of 50K. And that is what you see playing out on your chart. Yeah, 50K, 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 stop, 50K, 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 wait, 50K, 50K. Because if they executed 25 million in one go, the market would go like that. And they would get an awful price. So if they execute small orders and wait for the market to pull back, and execute more orders and wait for the market to pull back, and do that over and over again, what do we get? Market structure. When they've pushed it far enough and they've finished that order, the market will push back the other way, because the speculators who jumped on board with them will take profit on their moves. Push, pull, push, pull. Yeah. RSI extension, drop. RSI extension, pop. RSI extension, drop. RSI extension, pop. Which is why that's there. I'm looking for the relative strength by the banks so I can predict when the reversal moves are going to start. And I don't really care which way the move is. Ideally, I'd like to be on board with the current trend. The 24 and the 72 moving average from the daily are the quarterly and the monthly moving averages. Banks and institutions report on quarterly and monthly cycles. So these stay in line with what the bank's current positioning is, which is driven by the futures market, which is the commitment of traders, which tells us which way they are taking the price. All adds up into one massive pot of, but I'm not special, right? All I know is how this thing works. I'm a mechanic. I can drive the car, but unless you know what's under the bonnet and you can fix it, if you break down in the middle of the night, you're going nowhere, right? if you know how it works under the hood, it becomes very simple to understand which way is the most likely direction for price. However, you're not going to be right because we can't time the market because the banks are in control of when they execute the orders and we don't know what's coming in tomorrow. On Monday morning, the banks get to their desk, they open up their book, which is probably on a computer, not a physical thing, but you know what I mean, it's representative. They look and go, right, I've got to do this today. Same as way as you and me getting in the morning and go, oh, I've got to do all my analysis. There's always a bad bit to the job. The banks have just got to go and press buttons. And what the banks are doing is they're going and going, oh, for God's sake, there's no body to sell. I want to buy. Right? And they're sitting there going, for God's sake, I need to execute this order. There's not enough people. So we'll wait for it to drop a bit and then we'll go buy, 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 buy. And they just keep doing it until they get to where they want to be and they stop. And that's why the market moves and stops. Moves and stops. It's just business. Literally, you're looking at a market like if you were buying a piece of fruit and veg, you're going on Amazon and buying a product. The person that's selling you that product is the guy that has got the best price on it. When he runs out of stock, it goes to the next guy. When he runs out of stock, it goes to the next guy. Candles move up. When there's too much supply and not enough demand, suppliers reduce the price. Candles come down. Then they buy it back up again. Supply and demand, up and down. You just can't time it. No system, no strategy in the world can tell you which way the US dollar yen is going to go in the next hour. Apart from the banks. And even the banks don't know because they might have 100 million to execute short and there might be one that's 150 long. So that bank that's going short is going to get run over. When he gets run over, what do you think he's going to do? Bring price back down again. This is exactly what you are seeing with propulsion. Propulsion gap, return, propulsion gap, return, propulsion gap. Where do you think they're going? Why? Because there's people offside there that need to get their orders complete. It's just, this is everything you see on the chart has got a purpose. There's really 4 indicators I use. Relative strength, propulsion gaps, ADR, and market reversal alerts. So I'm using structures for signal. I'm using a condition indicator in the RSI. I'm using a targeting indicator in the form of the WRB and ADR. ADR tells me how far the market's likely to go. Yeah, we've hit 100 ADR. What's happened? We've stopped dead. Why? Because we've done our average daily range for the day. The banks have run out of orders. They're complete. The only time we move beyond this normally is when there's a news event. Why is there a news event? News events drive the market. They can execute large amounts of orders. Why? Because everybody's trading the news, which means there's more participants in retail, so they can execute more orders quickly. That's why we get big candles on news. Nothing to do with, oh, it's gone long because the news was good. It's gone long because there was a large market execution by a bank or institution. They don't care what the news was. Most of the time, they're just moving the market because they can, because there's liquidity provided by retail. That's it. Lots of it. All these news trading courses out there, feeding the banks all their money. How it works, isn't it? When you know how it works, obviously. Towel, please, Brian. Why did I say that was funny? Obviously said something funny. Why not be both MR and trend? If you want to, Greg, if you want to be both. But if you think about what you're saying, if you're a mean reversion trader, yeah, all you do is when you get that long, you leave it. Now you're a trend trader if it breaks out. But what if it comes back down and goes the other way? You're in drawdown. There's no point in risking it. I've got a 20 to 30% chance of a trade working out if I go for a trend breakout. I've got a 70 to 80% chance of a trade working within 1 or 2 positions inside of average daily range. Yeah, look at all this here, right? And look at the positions on now. Yeah, and look at how many of them aren't working. 2. There's 2 trades at the moment that aren't working. Out of all of these and all of these this month. Because 80% of the time, it's coming back and I'm getting out and I'm putting it here. Why would you not want to build this? Why would you want to sit here and wait for these two to get on board in the right direction out of all these other opportunities? To me, it's nonsensical, but that's because I know how far the market will move on a daily basis. Trying to catch a trend breakout on this, right? So let's say US dollar yen, you've been looking at it and you're thinking, this is trending short. I'm going to take the shorts, right? So you sat in it here and took a breakout short. It got down to there. Was that enough? Let's say your stop was there. Your entry was there on the breakout. That is just about a 2-to-1, maybe. If you were going for a 3-to-1, because you're a trend trader, don't forget, trend traders go for what? 3, 4, 5, 6, 7, 10, 15R return on their entries. Are you going to be happy with a 2-to-1? Probably not. And then it pulled back. And you're like, oh, okay, we'll take the next breakout. Push down, 2-to-1, came back. You would have got out there with probably a 0.7. Why? Because you were scared to death of this thing coming back and going against you. So what do you take when you're a trend trader most of the time? A break even. Why? Because you enter and it pulls back. What do you do as a trend trader? Use a break even stop. What does a break even stop do? Get stopped out. What do you get? Nothing. Trend trading, if you've tried it, is incredibly hard. Purely by the fact the way market structure works. When it pushes down, it pulls back. When it pushes down, it pulls back. It pushes down, it pulls back. Pushes down, it pulls back. If at any point in that process you moved your stop to break even, that's exactly what you were given. Every point in this process, I took a long, I profited from it. There, yeah. This thing's coming down. I've done nothing but go the wrong way. Everything's been working out. There. I took a short there, got out. But look at what I'm after. Yeah. Not one of those trades there is what? More than an ADR. Why? Because 58% of the time, the market sits within an ADR. Why would I want to go outside of its average daily range? It doesn't do that. Only does it 42% of the time. Very, very difficult to get outside of its daily range. It takes a news event, usually, or massive weakness on one currency with slight strength on the other. Then we just about get an ADR. Maybe a 125 if we're lucky. On a really bad day for the yen, we might get a 150. On FOMC, we'll go 400. But that's got nothing to do with price action. That's a news event. That's market participation, change of fundamentals, all that sort of stuff. So sticking within the range and targeting within the range will always get you out in the market. That's just the way I see it anyway. Sam, one thing I'm trying to understand is why the retail data in Forex is of value against large players. It's not. It's not. They don't know where it is. They have no idea where the retail liquidity is. It's not just retail, though. There's liquidity in the market in both directions, which is why these gaps get filled, yeah? We call it retail, but it's small institutions as well, yeah? If I'm trading with 25 million or 50 million, I am a spec. I'm retail. As far as these guys are concerned, I am retail, the banks, yeah? This is a $7 trillion a day market. If I'm trading with $50 million, I'm a spec, absolute spec. I'm not a spec, I'm big, but I'm not big enough to move the market. I can't move the market with that amount of liquidity. I can't become a market maker. So retail will jump on in the direction price is going. So the market knows that if it goes that way, it's going to find liquidity. Yeah. Short-term speculators in the futures market will do the same thing. However, they will be averaging into their positions and averaging out of their positions. So this is why the market comes back to these zones here. Yeah, because there's what's called unfinished business. It's a term used in futures, unfinished business. And it means that a institution is caught offside. So they will scale back into the position to exit on the return. And by continuously doing that, they will drive the market along with the rest that have been caught offside by the big bank to fill their order at a later stage. But this transaction might be 500,000 out of a 50 million portfolio. Yeah, they will regularly go into 15% drawdown on their portfolios because they will be scaled into positions waiting for the return. Yeah, so it's not just retail, but retail is always on the wrong side. Look, go to any broker in Europe. 82.7% of retail investor accounts lose money when trading. So if you know 82.7% of retail traders lose money when trading, and you know which way retail money is going, which way do you think it's going to go? Look at daily FX. Look at this. It's just, you couldn't make it up. Oil. Market goes long. Retail goes long. Market comes down. Retail decides to go short. Market goes up. Retail goes long. Market comes down. Retail goes short, market goes up. Neither of them can decide which way they're going. Then retail goes long and the market goes down. Then retail comes down and the market goes up again. We sit sideways for a bit. Retail goes long, so the market comes down. They short it, it goes long. They long it, it goes short. I can give you an example of this on every single instrument you can find. The DAX. Retail is selling the DAX. The DAX is going up. Retail goes sideways, the DAX goes sideways. Retail buys the DAX comes down, sideways. Retail goes short, DAX goes long. Yeah. Next example, Euro Swiss. Retail is selling it, the market goes up. Retail is buying it, the market comes down. I could do this all day long, but you get the message. That's why that is on my website. The reason Euro Swiss is going up at the moment is not because retail is all shorting it. The fact that retail is shorting it means that the market liquidity is sitting at the upside, not just retail, but everybody else as well. Because the market, what it means is the market has pushed down. What does retail do? There's a bit in the bootcamp about what retail traders do wrong. Yeah, I don't know if it will actually be. Yeah, it's on that page already. There you go. I come to this page a lot in here, which is probably why it's there. But FOMO, number one, fear of missing out. As soon as retail sees a thing drop, they go short. And they keep shorting it as it keeps dropping. But what happens is, as they hit the short button, is they put a stop in which gets taken out on the long side. Yeah. So it's a continuous. So in this case here on the US dollar yen, they would have been buying it, right? So they would see the market go up and they would try to buy the market. And they're always also trying to catch the bottoms. Look. Again, trying to pick the tops and bottoms of the ranges. Trying to pick the pullback point in a trend. As soon as you try and pick that point, your liquidity goes there and the market comes back the opposite direction. This is why everybody loses money, because everybody's using a stop loss. So all the market does is it just goes up and down gathering orders because it needs to fill its orders from Microsoft. So this just gives a gauge that shows you which way the market participants need to go if they need to complete large orders. And they need to do that all the time. So most of the time, we go against retail, as that chart shows, and all these charts show. Look at that. Sell, 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 buy. All right, we'll buy it. It comes down. All right, we'll sell it. It goes up. All right, we'll buy it. It goes down. This is real live data from brokers, from IG, largest broker in the world. This is their retail client positioning, and this is actual market movement. Inverse, always. So if you could stay online with COT, who at the moment are all long on the US dollar CAD, yeah, and retail are going the other way, you've got a conflict of interest. If, like the Euro Swiss, COT are long and retail are short, meaning we should be going long, you get a +6, there's a high probability that Euro Swiss will pop. And Euro New Zealand and Euro Yen and Euro Odd. They're the only plays at the moment that are from a combined sentiment perspective. Can you use this analogy to explain how you have managed your pound CAD trade? So pound CAD, I got in short on that RSI extension. You can see that, can't you? Yeah. And got offsided, basically, got caught the wrong side. It pushed up an ADR, so I took a second position. It pushed up an ADR, so I took a third position. This is an embedded stochastic. This is one of those instances where it doesn't work, and this will happen. Yeah. So the market then, I was expecting to do a profit take move, but as you can see, there's no propulsion gaps. There's a little one there, right? But there's no propulsion gaps on this move, meaning that the market was totally efficient in its movement to the upside. Therefore, there's no reason for them to come back down and fill an area where we've had an inefficiency form. Yeah, so there's no reason for market participation to drive it short. So we sat there and went sideways for 1, 2, 3, 4, 5-ish, and 5.5 days. So I sat in drawdown for 5.5 days on 3 positions. Then we got a little price discovery to the upside and then a push. So I did drawdown control on these positions. Took some size off, yeah, just in case this pushes further. Then we went into accumulation for 1, took another position short there, yeah. Then we went into accumulation for another 2, 3, 4, 5 days, yeah. So what I did on Friday last week on day 3 of that accumulation was I took an aggressive drawdown control position, which is this 0.7. So the total lot sizing on this would have been somewhere around 1.5 lots short. So I entered a 0.7 short, which is what's called an aggressive drawdown control position. And then that has a stop loss, which is worth £300 or $300 in this case, which is 0.3%. So if this position had stopped out, it would have lost me 0.3% of my 15% this month. But what it does is it brings my average price, as you can see, I'm just about to get to average here, up. So the average price when I entered there, before I entered there, was somewhere around there, 150 ADR away. By doing the aggressive drawdown control position, it's brought my average up to reachable levels within an average daily range. Yeah, price moves up and down within its average daily range. So all I need is a hit on ADR to the downside, which happens 42% of the time, and I can exit this position. So I've just basically brought the odds back into my favor at 42% chance of being right. Not bad, is it? Almost a 50-50. So when you're position trading, your goal is always to keep your average price within an ADR, because the price spends 58% of the time moving around within its average daily range. If your target or your average is within an average daily range, there's a 58% chance you're going to achieve your target, or have a chance to get out of break even with no loss, which is a win, isn't it? Rather than taking a stop loss, so rather than going short and getting stopped out, 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 that one, I wouldn't have got stopped out on that one. Yeah. So rather than taking those 4 hits and taking 4% off of my account, a 4% loss, assuming you're getting in with 1% risk, right? Because I don't take 1% risk, obviously. Instead of losing 4% on my account, I am now sitting in 0.16% of drawdown on pound CAD. And if I want to, I can just shut the whole lot out now and go, oh, well, I'm now down to 14.94. Yeah. So that's an example of, it's not a squeeze, it's just wrong. But like I say in the bootcamp, when I'm wrong, I'm temporarily wrong. So these wrong positions I've been in now for 3 weeks, I'm now exiting. But look how many times it happens. The vast majority of the time, it's 1 or 2 positions, and those positions will ferment for a bit, and then I'll get out of them and bank them. But I'm not looking for a 5-to-1, a 3-to-1, a 2-to-1. I'm looking for a quarter of an ADR to a half an ADR move. In, out, done. Because I know that's achievable. I don't know when it's achievable because I don't control the market and I'm not a bank. But I know how the banks work. when I know that they're going to come to here and they're going to come to here, which is why the TP on this aggressive drawdown control position is sitting right bang on the top of that propulsion gap. And I fully expect within the next day to be out of this whole thing and flat with probably 1-2% profit. Yeah. So I'm sitting on this position now at $500 profit. I could bank now, I could bank $900. So I could go up to 1.8% today. That would then jump to probably 1.3% in drawdown. Yeah. And my average price would drop down to about there. But there's a big propulsion gap there, so that could easily get hit, come down for a double bottom. I've no idea what's going to happen. Of course I haven't. If I knew that, I'd be a millionaire, but I'm not. Does that make sense? Pound CAD? It's a good example, Pound CAD. And Pound New Zealand, same thing. That's sitting in 1.3% drawdown at the moment. Going the wrong way. So initial entry there, second entry there, third entry there. I haven't had an out. I had a break even there, but I didn't take it because I want to make money. There's a propulsion gap. Some point we're coming back down to there. I don't know when, but we will, because propulsion gaps get filled. Always. Very rare. Get tiddly little things like that. You know, the tiddlers, that one got hit, but I mean, not really interested. But that's a sizable propulsion gap. There'll be a large volume that needs to be corrected in there at some point. Thanks a lot. You just simplified trading in a few words and made it easy for me to understand and apply principles. Naz, back up again. Naz, this is a nightmare today. The Naz, this is a nasty. All indices today. We're in a range, what we call a rotation day, aren't we? It's a rotation day. Very hard to make money out of anything today. Just about to start the boot camp, the 12-hour one. Yeah, well, I haven't done that short one yet, so you haven't got the choice, Thomas. But yeah, go and do that. Best 12 hours of your life, listening to me waffle on, and you'll have to do it twice, so it's the best 24 hours of your life, really. Right, I'm going to leave it there today. Anything you need, I'll be in the Telegram group, if you can get in the Telegram group. Leave us a thumbs up before you go, would be much appreciated. If you haven't subscribed, hit the subscribe button, hit the bell, make sure you know when I'm on. I'm streaming 7:50 a.m. every day and 2:20 p.m. UK time. So basically here for the Frankfurt Open, London, and here for the New York Open. And yeah, just basically doing the same stuff as we've been doing today, really. Waiting for stuff to happen, which at the moment is like pulling teeth. Okay, I will see you guys tomorrow. Have a good one. I'll be back 7:50 tomorrow. And obviously tomorrow afternoon, 2:20 for the afternoon stream as well. So have a good afternoon. Hopefully it's profitable, and I will see you then.